You're watching news headlines on mining.com. Canada's Liberal government delivered its 2025 budget this week, and mining emerged as one of the biggest winners. The plan includes a new $2 billion Canadian sovereign fund to accelerate investment in critical minerals and expand exploration tax credits to more metals. Natural Resources Canada will also receive hundreds of millions in new funding for early-stage mining projects and infrastructure. Pierre Greton, CEO of the Mining Association of Canada, says the budget sends a powerful signal that Ottawa is serious about improving competitiveness in the sector. The budget forecasts a $78 billion Canadian deficit this year, but includes plans to trim spending and jobs to fund long-term capital investments. Well, gold prices bounced back to the $4,000 mark on Thursday as investors sought safety after a sharp drop in global equities. The rebound followed stronger than expected U.S. jobs data, suggesting the labor market remains tight and making more interest rate cuts less likely. Traders now see just a 62% chance of another Federal Reserve cut in December. That's down sharply from last week. Analysts say gold is likely to consolidate between $3,800 and $4,050 as markets weigh rate expectations and weaker retail demand in China. The European Union is investing Chinese-owned MMG's $500 million purchase of Anglo American's nickel assets in Brazil, warning the deal could hurt Europe's stainless steel industry. Competition regulators warn the deal could threaten Europe's stainless steel industry by limiting access to ferronickel. That's a key input. MMG and Anglo have until March the 20th next year to propose remedies or risk the deal being blocked. The move underscores Europe's growing scrutiny of Chinese control over critical mineral supply chains. MMG, controlled by China Minmetals, has faced similar criticism from the U.S. steel groups, who argue the deal could tighten Beijing's grip on global nickel production. China's thermal coal prices have climbed to their highest level this year, lifted by stronger winter demand and supply constraints from extended mine inspections. The benchmark price at the Qinhuangdao reached 788 yuan a ton. That's up more than 10% in the past month. Those figures according to the China Coal Transportation and Distribution Association. Now, traders say utilities are restocking ahead of winter, while safety checks and tighter production controls have limited supply. Confidence has also been boosted by a U.S.-China trade truce and Beijing's softer tone on limiting coal consumption. Industry groups expect demand to rise steadily in 2026 before plateauing by 2030, suggesting China's coal peak may come later than previously thought. A new study in Nature Communications warns that waste from deep-sea mining could disrupt life in the ocean's so-called twilight zone. That's a vital layer supporting much of the marine food chain. Researchers from the University of Hawaii found that mining sediment plumes in the Clarion-Clipperton zone, that's a vast area of the Pacific Ocean stretching from Hawaii and Mexico, could affect over half of the zooplankton and 60% of micronectar. This as plumes dilute their food supply with nutrient-poor particles. The study says waste creates murky, nutrient-poor waters. It's like dumping empty calories into a system. That's according to one researcher. With 1.5 million square meters of that zone already licensed for exploration, scientists warn that poorly managed waste disposal could damage ecosystems from surface to seabed. Deep-sea mining is yet to begin commercially, and researchers say now is the time to make informed decisions before irreversible harm is done. And that's where we leave your news headlines for now.